Well, they did what everybody expected. The Federal Reserve raised 25 basis points and they signaled that they are still prepared to do more. But on the flip side of that, they also then said, we don't see a US recession anymore, even with bonds incredibly inverted, and that it could be that we're going towards a soft landing is back on the table, which is what the market's already been buying into. So the Fed's not really scaring the market at all, are they? And on top of this, we really then go back into earnings. So while Microsoft said that they aren't going to be able to be profitable from AI just yet, Meta looks like they have been. And of course, momentum is now driving earnings and they're up significantly in after hours. What does that mean for us as traders and investors? What also were the sectors doing well and poorly? One of the ones we need to break to new highs if we're bulls in this market right now has to be semiconductors. It's still island reversal towards the bear side. And then we have Meta. Where will it open and where will it close? Well, Google held just on those highs that we'll look at later in today's video. Meta is set to open around 320, a very interesting zone with some big volumes and some incredible volatility that's about to start in these markets. Well, welcome back everybody to the Daily Show where we talk about markets around the world. Of course, we'll be bringing you all of the updates for the macro, leading indicators, and of course the hottest charts. And there's so much to discuss here in this market, but let's begin with rotation. Microsoft, Oracle, Adobe, they were all down on the session, as was semiconductors. However, we saw really online advertisers do really well. Google, Meta after hours, they drove and countered the sell-off that was happening in the NASDAQ, and especially after hours, Meta's results and aftermarket press conference really did well for the markets. So what do we know through going through history of the next 24 years and even more? Well, we generally get what we call a huge spike in volatility. This is actually the most volatile period of time that we're entering into. Now, what I've done here is I've gone through pre-election years of the VIX, and you'll notice that we get this huge spike in volatility that tends to start right around now. I've shared this over on our Twitter, so follow at FX Evolution down below, or whatever it's called now, X, and follow the links in the description down below if you're interested. Here are all of the years taken together, and you can see again, even if we go back over 34 years, you still tend to get a hell of a lot of increase in volatility, though it's often less sharp and more of a kind of rounded increase over time. Have we seen any of that appear yet? The answer is absolutely not. We do also know that when we talk about volatility and then we go into where we are in the markets at this stage, and if we go back over to the Twitter, you will be able to see that this is 2023 versus pretty much what we are doing right now. Now, here's where we are, and the market is basically sitting around this point. Of course, it's higher, but this is usually where turns happen, and we enter into the next 2 to 3 months, which tends to be not only the most volatile time, but also potentially one of the most risky periods where we get those little bits of pullbacks. And then of course we end the year usually higher. But if we're waiting for mean reversion, this is usually where it's going to happen. Have we seen any signs of that? Well, we got massive volatility and massive volume coming through last OPEX. That was Friday and Thursday last week. But we also have now started to see some sells, or we consider they could be sells, on 3x leveraged funds. Now, a lot of the time, hedge funds and more of these kind of larger funds will trade big 3x leveraged ETFs. And we just saw one of the largest transactions go through SPXL. And basically this means that maybe it's a sell at these highs. We don't know yet, but it can be an inkling that something has definitely taken some profit over the last 24 hours. I doubt that's a buy considering that price action. Bonds were also purchased, we can assume, based on where we've got here. So this is the PIMCO Active Bond Exchange. And straight after the Federal Reserve's pretty much mentioning of everything that they've been talking about, somebody obviously bought a fairly large quantity of bond from PIMCO. Does that mean you want to go jump into it? Not usually, but it's something that's interesting. We also got a couple of dark pool transactions through the Qs at the high and through the Qs at this base. Now, if we do make a new high, we can assume that these Q base purchases were obviously bulls, and there's usually more of a squeeze to go. But at this stage, we're just updating you that we're seeing these volumes, and of course, we'll be looking at the charts later on. So has the options market been correct this earnings season? I would say overwhelmingly yes. They expected around a 9 to 10, even 11% move on Meta, and we actually ended up getting around 7 to 8% after hours. So pretty good. And of course, Google and Microsoft, Snap and Spot were all pretty much on. So remember to subscribe to this channel. We'll be updating you for the big moves as well moving forward over the next couple of weeks. And we still have some big ones. We've got Intel ±7. And then of course, we've got some of the more significant companies giving us their returns, but they're going to move between 3 and 4% on the day. McDonald's, MasterCard, they'll be interesting. And then of course we see Chevron as well. Let's go over now to just a bit of a different chart so you can see all of the other companies that are coming out in terms of some of the smaller ones. We've got Crocs and Roku. I know a lot of you in the community like that. And let's go into the wonderful world of options, which is where we look at probably unusual moves. Did we see any unusual flow that we could take advantage of over the last 24 hours? I'd say probably not that many. We did have, a bit of a pickup in some of the hyper stocks. DocuSign has been traded quite a lot recently. Zoom's been one we've been talking about, though it did fall off the other day. And then, of course, we also have some healthcare stocks such as Johnson & Johnson continuing to show themselves with unusual options flow in the vicinity of anywhere between 3.37 and Boeing at around 4.73 times 90-day average. Scroll down, we have 58% calls, 42% puts, which is still hugely call weighted. And there's been no real, I guess you would say, significantly large options trades that I've seen over the last couple of days that are really significantly unusual. Though Oracle did have one thanks to its lawsuit being fixed. Let's move over here to energy, utilities, and all of the normal kind of inflation play style sectors. This is the last 5 days. Now, we notice that some of the best are still the defensives. Utilities, healthcare, and staples. But at the same time, look at what number one is, energy. Now, energy is traditionally recovery style market, same with KRE, regional banks and banks in general. And they've been leading kind of the charge. This is usually the next sectors that tend to go. We've been talking about this. If we're in a bull market, we're in a recovery market, these sectors tend to fly up higher. And then we go to, more of the hyper stocks after that really come out of their base. So I think it's worthwhile keeping an eye on hyper stocks and especially keeping an eye the next 2 to 3 months, because if that's true, the Russell 2000 could be the place that we need to be watching very, very closely. So just before we jump into the charts and we take a look at all of the hottest levels that we need to be watching right now, I want to say a big thank you to the sponsor of today's video, which is Tiger Brokers. Now, not only do they have a bunch of special offers down below for members of this community, but on top of that, they have some great tools this earnings season. So if you have stuff in your watch list, positions that you've got open, or even just want to know when reports are coming out, IPOs, etc., do you have the right software that can help you? In Tiger Brokers, you can select weekly, monthly, and daily views, and more importantly, they also give you some extra news feeds. Now, if you've ever tried to subscribe to some of these feeds, they can be expensive. Tiger Brokers put them in both their mobile applications and their desktop platforms, and they update it every minute. So if you need things at your fingertips, which we often do in markets, it's all there. And this earnings season also means that we need to check valuations. You can click into their software, have a look at analysis, see some of the main economists' upgrades and downgrades, and more importantly, you can click more as well within their platforms and then select the valuations, financials, summaries, filings, etc., and get into the nitty-gritty if you wish to. So what are you waiting for? If Tiger Brokers is right for you and you think you want to give it a shot, you can go check that out in the description down below. So let's jump into the charts now. The volatility of the volatility, that's the VVIX, dropped off a cliff. That's because the Fed meeting is over. And of course, Meta has also given its returns by now. We also have the VIX dropping to new lows. Now, we've talked about this for a while. There's a gap on 12.12, which happens from 2020 before the pandemic. Now, all gaps fill on the VIX, I believe, is the statistic. So there's a good chance that this will eventually come down. Will it want to come down first to 12.12 before spiking into its seasonal increase? Remember, August and September are the highest VIX spikes of the year, and I don't see why it won't be that way again in 2023. The skew is absolutely flat, so no information there. We're not seeing real strong crushing or anything, or even increases on that. And the US 2-year almost didn't move after the Fed was talking. So really, pretty much interest rate traders didn't really think anything of this meeting. Remember to mark out 5.1 and also mark out a new low here on your chart, set alerts. that will actually help you to make better decisions on several different markets, including gold and many others. And we'll talk about that later on. As we mentioned, bond saw some nice trade, and there was a big trade that came through in the last 24 hours. Was it a buy? Well, if we go out to a weekly, you can see how bad this fund's been performing. I'm not saying it's based, I don't know. I'm just exchanging basically some information with you guys that shows that there was a large trade that went through here. And I think that's traditional through most of the bonds at the moment. We've seen treasuries standardize themselves at these levels. Junk bonds are just floating at these resistance highs. And if we do end up getting breakouts, I would say bonds will get a rotation into them relatively quickly. Magma, which is Microsoft, Apple, Google, Meta, and Amazon, is what we're watching with Nvidia and, of course, Tesla this earnings season. And it's basically staying flat. We've seen Microsoft go bad, relatively speaking, and Google and Meta do really well. So now we enter into the last two, Apple and Amazon. How is the American consumer looking in this current market? Remember, with the American consumer, what we're looking for is XLY generally versus XLP, and that shows us 1/3 of the US economy, and it's sold off recently for a few days, but this has been really more of a recovery path. And you'll notice that it bottoms off in December of 22, and then it's just been kind of going stronger and stronger and stronger for the last couple of months. This usually shows us that the market believes the American consumer is improving, but it's just switched last week. So this is a significant thing, and we will be watching it. As we saw before, we've got copper as well on the charts, and the Chinese market stalled thanks to the stimulus not really coming through, probably till October for now. But the copper market is back up at these highs. See the closes? See that little level up here at about 3.95? We're certainly paying attention to copper right now. If it breaks out to a new high, it'll move, I think, fairly quickly towards 4.12. And that's going to be good for things such as the Australian market, the FTSE 100, which is the UK market, and really anything to do with energy, metals, and possibly even banks. It shows an improvement in the economy. Now let's move over to central bank liquidity. This thing is so red, I can almost not see it on the screen. Basically, it just shows this huge divergence between central bank liquidity and where price currently is at. So there's a big difference there. The US dollar has fallen from our drop base area. It actually gave a little head and shoulders in here. I did a quick seminar on this last night. I was talking about how this would be the target if you were a scalper, and it hit that level, which is kind of cool. And then, of course, we see some very large volumes. So we obviously have that trade volume coming through at the same time. So yeah, basically dollar index sold off a little bit here. We go to the long leg doji, we go to the close. It's signifying that there's a decent chance that there might be further selling in the US dollar as of this level. We thought that this would be the first zone. The second zone would be somewhere around 101.65 to 102. It's still possible that's hit. And you can see why, because on the 2 hour, while we've come down, we haven't quite broken to all the lows. So we need to take out this demand here and probably this one here. And once that occurs, we can be pretty sure that we're going back down into this structure. And therefore, we've got that kind of next move to equilibrium. So for now, dollar index is looking short, but it hasn't gone to the new lows just yet. That's also helped gold to regain its strength. Now, this has changed to the upward side on the 2 hour timeframes. And we saw a low take with a breach out over the last 24 hours and then sold back off back into these areas. Very good POC through here. And a few people have been trading it between 1960 and I think it's about 1964 in terms of going long. At the moment, it trades at 1973, and we're looking for new highs here for gold if it's going to continue its momentum flow. We reported basically a few weeks ago that we had a suspicion that this was a huge trader. We found out it was. Volumes have dropped off since that point, but at the moment it's still holding an upward trend. And if it goes through this level and holds above, which is around, I believe, 1985, then we should be moving to 2015. So I'm very excited for gold, and certainly one we're watching on the charts at this stage. Let's go into some single stocks now. We'll talk about Microsoft. At the moment, that looks pretty weak on the weekly. It could be an inkling of things to come. Of course, Microsoft not doing very well, and showing you a huge weekly pin bar or shooting star with potentially a follow-through candle. Now, if that closes bad this week and semiconductors also close down, I'm really torn on this market because semiconductors usually show us the way. And of course, that's currently an island reversal at the highs. So if we get a new low being formed, I think the bears are in control on this market, at least temporarily. Let's go over to the bull side though. Google did really well. It's a bit of a shame it closed on these highs. However, that does look like a breakout that should be pushing towards 140. So if you're a bull, Google's looking pretty good right now, and I'm guessing it's going towards 140 based on this current price action, the accumulation, and everything that's been happening. Meta is kind of similar. It's going to open around 320. Now, this is where the sellers, if they're going to regain control on Meta, will push it. So basically, they'll be pushing it back down or trying to. 320 is a significant level. So similar to Google, we're seeing whether it can hold its highs. And at this stage, we don't know that. So we'll come back and revisit Meta in the future. There are a couple of gaps that could be filled. If you scroll through your data and you look at the left-hand side and you go back quite hard, you'll notice that there's I think it's over here, there's a gap fill that sits around the price of 327. So I think somewhere around that will be where we're kind of targeting if we were going towards the bull side on Meta. But at this point, it's going to open around 320. Congrats if you've been in it. Otherwise, I'd be a bit cautious about how that opens up. Let's move now to Oracle, a stock that we don't usually cover, but the private community kind of figured this one out yesterday, and I was pretty happy with them. If you're interested in the private community, we do have a free 7-day trial, links down below. We had 2 inside candles. Now, as that broke the low or the high, whichever way it had gone, it's usually a pretty good sell or buy because you had that really nice coiling market. Now, it sold off into the close. It looks like, based on where it was coiling, that it should continue to see some selling market action. Usually these begin like a little bit of a momentum move, these insides that come off, because it gapped up and stayed within. So this is a fairly significant little candle pattern. I'd be looking for further weakness over the next couple of days in Oracle, though it's already started, so risk-reward ratio may be off at this stage. But yeah, nice little movement below, and we can look here at the 15-minute chart and just see as it took that low, there was a little bit of trade that went through. You can see the trade here, and then it instantly just kept going and diving lower. Good little coil market. Hopefully we see some momentum coming off that particular trade. Let's move over to Tesla, and Tesla is doing absolutely nothing. It's sitting in the middle of nowhere land. I'd like to give us updates. We just don't have any. I don't know what it's doing at this stage other than it could be accumulating or distributing. It's making no moves. We'll update it very soon because we always do cover Tesla. The German market got sold off pretty heavily, went to 16,000 and then rallied off that point. This remains the most important area for swing traders. And people that were short it, I hope you kind of heeded the 16,000 level because this is a big technical zone. Now we know that if this market continues to sell off, and notice it's come back to that trend line and found a couple of wick rejections, this is where if it's going to sell, it sells again. It would go down to 16,000, hopefully break it, and that would give us a swing trade short at the right level for the German 40. And remember, this is all based on that what we perceive to be a Wyckoff distribution from a little while ago. Strong buying though off 16,000. These bulls, they almost can't be stopped. The Australian market broke out. Now this is pushing towards basically more inflation trades and more bulls coming back in. 75.50 would be the next target for the ASX 200. We gave up on our bear train over here for this particular market after we reversed about 50 points away from where we thought it would go. 69.50 was our original aim. And yeah, I mean, it's just been sitting in this neutral territory, but that's a breakout. And you can see banks in particular in Australia are breaking, as well as energy. These inflation-based trades are all breaking out. And that's the strange thing about this. Is it recovery or is it something underneath the hood that we saw Bank of America, JP Morgan, and Goldman Sachs report, and we talked about this in our weekend video, where they said that the last print of low inflation for this year was already in. Interesting. These markets are front-loading these inflation-based trades, or at least recovery-based. US 2000 coming in and approaching 2000. Nothing much from this market. We're looking for a breakout of that to show us momentum's in. At this stage, it's at resistance. NASDAQ trading kind of weakly. So Meta and Microsoft have been kind of stuffing with this along with Google. We didn't get a new low. We did see a sell-off. It was upwards of about 1% at one point plus, and then it rallied back after hours. So yeah, just a huge amount of either accumulation or distribution. I don't know what it is yet. We will get a breakout, I would say, within the next 1 to 2 days. and that will probably signify some fairly large moves. And do remember, we know there's 2 large trades sitting in that area, so we just don't know whether they're buys or sells just yet. On evidence, we do have this big shooting star, which pushes us into more of the bear thesis at this time of year, especially with the data that we have. But yeah, that's where we're at. And now let's go over to the US 500. So the US 500 continues to kind of slightly melt up and make new highs and then reject those highs with wicks, but just no follow through. Very little idea which way this is going just yet. The trend is still up. Of course, people that are shorted here will have lost their positions or broken even the trade. Ideally broken even the trade because countering is hard at the moment. You can see the volume spike that came in. 4,500 remains where swing traders will be excited about the market actually selling off. And at this stage, if we get a closure above this zone on the daily, because you can see the wicks now, we know that it would most likely be pushing towards 56.50 at that point, which is where a gap fill is as well. So yeah, bulls are in control at this stage. There's no bears. They have failed to regain anything, and we will continue to see what happens with the technicals over the next coming days, and really watch semiconductors, Microsoft, and a few others for the closes in the week. Bitcoin remains kind of lackluster. It broke underneath this, and it still would be pointing towards 28,000 for now. If we do get a 30,400 plus close, then of course we're going for a squeeze. And the higher the NASDAQ goes without Bitcoin coming with it, considering where Bitcoin's at, the higher the probability, in my opinion, that we will get a large breakout on crypto sometime later on this year. So because the halving event is only just around the corner, I'm kind of excited for Bitcoin. We're just looking for the right signs. And that's something that, there's always different opportunities in the markets. Remember, guys, we come from an abundance mindset, so there's always another opportunity. In terms of what's going on, we've got ADP, advanced GDP for the US, then we've got unemployment claims, the ECB press conference as well, Bank of Japan outlook reports, and then we move into core PCE price index 8:30 Friday, July 28th. If you've enjoyed today's video, then make sure to subscribe and of course smash that like button and check out the broker down below if you're interested, Tiger Brokers, and see whether their special offers are right for you. Thanks so much, everybody. Bye for now.